Thank you, Scott. Happy to be here.
So are you more impressed with the Dow of late or the resiliency of the NASDAQ this week?
So this week has been absolutely nuts to watch. It's been super fun, actually. And it just reiterates my whole view that I've been telling clients all year. Tech isn't dead. When we have these bounces, they're coming hard and fast. And while tech has definitely led the stock market down year to date, in fact, if you had not included the big five who announced this week, you would have actually outperformed the S&P by about 2.3%. But if you did not include these names, you would have underperformed on the last 3 years by an average annual clip of 7.88%. I was just running the numbers on Bloomberg this morning. So we really do not believe tech is a place you can avoid. Every company in the world has to have technology to operate.
Do we, though, need to reset our own expectations for not only the growth of the businesses themselves, but the growth rate of the stocks?
There's a mental heuristic that applies to everybody in this world called anchoring. And I think about this all the time because when we talk to our clients, it comes up often. They think about where their portfolios were at the market peak. They think where their stocks were trading at the market peak, and they get attached to these numbers. I do think, Scott, we have to reset expectations. Look, the valuations in November were too high. I said that publicly in November. I said that publicly again in January. I felt we had to have a reset in these names. However, we depend heavily on technology. And while the valuations were too high, I also think the pendulum has swung too far the other direction and that these stocks have gotten overly beat up. And really what's exciting about this week is it reiterates that there are a lot of buying opportunities for a patient investor.
Does that also suggest that you think there's too much excitement around the value trade, which has obviously picked up of late, and some are now suggesting that it's going to have its real moment after years of being out of favor for growth, as you just mentioned?
Yeah, it's a really good point, Scott. Value has underperformed the rest of the markets and certainly the growth sectors of the markets for the last 10 years running. And we have seen value outperform year to date. However, it's really easy to look at stocks in silo, but you have to think about wealth management in its holistic view. And if we had sold all of our big tech names last November, we would have incurred 40% taxes for our clients. And if you think about a 40% tax hit, that is still significantly worse than how much the stock market is down year to date. As of today, the stock market is down broadly about, just under 20% of the S&P, closer to about 30% on NASDAQ. But you're still better off riding through that than incurring taxes if you think about your long-term goals. And I don't buy stocks for the next 2 weeks, the next 2 months. Recessions on average last 14 months. And so if we are investing for our clients for a 14-month time frame, we're really doing them a disservice. I think there's a lot of room for comeback. I think that while the valuations were definitely too high last November, and I don't expect to necessarily get back to those numbers, what we know about markets is that when we have a 20% sell-off in the S&P 500, the markets are positive 1 year later over 80% of the time. The markets are positive 2 years later over 93% of the time. So the reality is we want to really look at companies we want to own for the long haul. We want to hold those names. I'm a big advocate of hedging, however, because for me, if I could hedge some of these big tech names that I did think were overvalued, I can keep clients in them, not pay taxes, but I can also create some downside protection. So as the markets go through these gyrations, as we work through what the Feds are going to do with interest rates, we still have that protection in place. So I think it's really important to not just look at the stock picks, but also look at the taxes and the impact on one's true wealth.